Hello, welcome back. This is Seewing Yee, and today I'm going to go over the National Association of Realtor (NAR) report dated August the 22nd. As I conclude this video, if you see any value, please like and subscribe to my YouTube channel, and also subscribe to my website your email, that is, so you can receive weekly newsletters about real estate investment news. All right. So without further ado, let me share my screen and go over today's very timely, very timely update on the existing home sales per the National Association of Realtors. And the headline is that the existing home sales slipped 2.2% in July. Home sales, not home prices. That's an important distinction. And the key highlights are, again, other than the 2.2% existing home sales year over year to adjusted sales annual rate of 4.07 million, which is a decrease of 16.6% from a year ago. And the median home prices rose almost 2% from a year ago to a whopping $406,700. And finally, the inventory of unsold existing homes increased slightly from the previous month to 1.11 million at the end of July. However, and here's the very important metric, which is 3.3 months supply of inventory, which is the current supply inventory, which is, just to reiterate, the normal inventory supply that create a balanced, healthy market is anywhere from 5 to 6 months. Since this is a 3.3 months of supply, needless to say, we have a very low historical supply of inventory out there. So this is the main challenge that we're facing for the foreseeable future. So again, just to go over the detail, as you see the yellow highlights, year-over-year sales have decreased 16.6%. And two factors are driving current sales activity, which is inventory availability and mortgage rates, said NAR chief economist Lawrence Yun. Unfortunately, he said, both has been unfavorable to buyers. Yep, it's the lock-in effect. Sellers are just not selling their historical low interest rate, go around 3%. There's no way they can move up to a 7.5% mortgage rate at this moment as I'm recording this video. No, virtually no motivation. All right, again, housing inventory, total housing inventory, again, 1.11 million units and down 14.6% from a year ago. And the median home price as of July of 2023 is $406,700, as I stated. Prices rose in the Northeast, Midwest, and South year over year, but were unchanged in the Western region. Lawrence Yun further stated most homeowners continue to enjoy large wealth gains from recent years with little concern about home price declines. However, many renters are concerned as they are facing growing affordability challenges because of high interest rate. Just to reiterate, homeowners are sitting in a gold mine of equity over the years, especially a couple of years ago at a historical low interest rate. They have purchased and they have refinanced. So this is a lock-in effect. So this is the biggest challenge, the lack of supply of inventory. And as a result, we're seeing almost a 40-year home affordability crisis. And a lot of people are priced out of the home purchase market, especially primary home buyers out there. If you look at a $400,000 property today at a 3% interest rate around 2 years ago, the mortgage payment will be like $1,500. Now, the same $400,000 home price at 7.5 mortgage rate, the monthly mortgage are increased more than 60%. So these past 2 years will continue to cause people, prospective home buyers, to sit on the sidelines due to elevated mortgage rates. and rising home prices and the lock-in effect by the sellers. And the builders are trying their best to offset the historic inventory shortage. However, it's only a short-term solution. It's not a long-term solution. So we are expect to see a very acute supply of homes shortages for a while to come. Based on my opinion, and also based on a lot of data. All right. So nationwide, first-time home buyers are responsible for 30% of the sales, and so that's good in a way. So out of all the homes that were purchased so far this year, 26% of the transactions were all cash sales. Almost 1/3 of the existing resale home inventory were purchased with all cash. So this means there are a lot of money out there. People who have financial means are still pursuing real estate, which is a very attractive, hard assets, historically speaking. Individual investors or second home buyers who made up of many of the cash sales, around 16% of them actually, slightly down from 18% from June, but up from 14% 1 year ago. So this means people who have the financial means, individual investors and second home buyers, they are very motivated to buy homes to live, a vacation home or investment home, and they are going to bypass the high mortgage rates by buying with cash. They're making the mortgage rates irrelevant in their situation. The next quote here, the next paragraph, distress sales, foreclosures and short sales represented 1% of sales in July. So this means any talk of foreclosures out there, any talk of distress sales out there are pretty much non-existent. 1% of the total housing transactions were distressed. This is pretty much a historical low. So whatever you hear out there, the housing crash, porn, bros, or the doom and gloom, the naysayers out there, whatever they're reporting about how the foreclosure abundance is hitting the market, that is absolutely wrong. That's not the case. The housing market, they have so much equity in all the homes, people sitting at a lock-in effect, and with a historical low mortgage rates, there are very little distress out there for the time being, coupled with the strong job market and strong everything else out there. Things are looking pretty good for existing homeowners. All right. So the mortgage rate, we'll talk about that momentarily in a few minutes. So let's go on over the single family home sales slid to a seasonally adjusted annual rate of 3.65 million, which is down 16.3% from the previous year. And let's go with the regional breakdown. Existing home sales in the Northeast, although it has decreased almost 6% this month, July from June, which is down 23.8% from the same time last year. Again, home sales in the Northeast down 23.8% from last year. And in the Midwest, home sales are down 20% from last year, previous year. And then in the South, home sales year to date is down 14.3% from a year ago. And in the West, home sales are down 12.5% the previous year. And the median price in the West was $610,000, which is unchanged pretty much from the same time, July 2022 last year. So now I'm going to switch over to Mortgage News Daily, and today's rate, August 22nd, 2023, which is a whopping, the 30-year fixed rate for people with very good credit is already at a 7.49%. And this is absolutely, this is a 22-year high, by the way. It's the highest mortgage rate since the year 2000. So you could make an argument that today's mortgage rate is the highest during this 21st century, okay? Since 2000, all right? That's what's happening. This is absolutely mind-boggling. 30-year fixed rate for VA loans are 7.12, and for FHA home buyers are 7.12 as well. So a little bit lower than the primary mortgage rate at 7.49. So that's very troubling to say the least. And now let's look at the Mortgage News Daily. Last July 2022, the mortgage rate were 5.72%, and today is at 7.49. So it has been a year-over-year increase of 1.77 rate higher last year to this year. So this is absolutely a big time change. Now, let's go over the past 1 year. At the beginning of the year, as you can see, the average mortgage rate were 5.73%. Then it has been fluctuating around the 6% range throughout this year, 2023. And then recently has increased. We started to increase to reaching 7% around August. No, let me take a look. Around July of this year, July, August, the last 2 months, the mortgage rate has steadily increased. It has reached at 7% and 7.12 at the low sevens, now at a 7.49, according to Mortgage News Daily. So that's pretty dramatic. That's all I'm going to say for right now. My takeaway from the NAR report and from the mortgage rate changes, drastic uptick, is that the supply of inventory continue to be very low. Is take a drastic change of the mortgage rate to increase the supply. This is a lock-in effect. Actually, with the mortgage rate increasing, I expect the home prices to increase. I say it again, just because the mortgage rate has reached a whopping 7.49%, a 23-year high, the housing prices either going to stay flat nationwide or increase. It's not going to decrease because we have a historic low supply of inventory. We still are having a pretty pent-up demand, even though the mortgage rates are elevated at this time, because once again, even though the demand of homes has decreased even more than it has in the past few months or the past 1 year, we're still having very motivated buyers, very qualified buyers who has good credit, who 1/3 of them almost are paying with cash. So money is pouring in the housing market. So we have investors accounted for like 20% of all the cash sales, as I stated earlier. So really, the first-time home buyers are being priced out of this current market, if you think about it, because they cannot compete. They don't have all cash buyers money to buy. They don't have a high down payment. So right now, only the people who have the financial means are willing to pay all cash or 20% down payment or 30% down payment. And investors also are into the market, even in giving this mortgage rate volatility. So again, a lot of people, the demand will continue to decrease. The mortgage applications I expect to be continue to decrease. So if the mortgage rate or continue to be above 7% for the rest of this year, we can see some stabilization of the home prices. I don't see any decrease of home prices because there's no stress out there. There's still more buyers than there are sellers. As a result, economics 101, when the demand is greater than supply, prices, it will put upward pressure on prices. At the end of the day, the lock-in effect is still ongoing. And as long as the mortgage rate the way it is, people sitting on the historical low interest rate, they're not bulging, they're not moving up. This is a frozen market, if you will. This is an unhealthy market. It's just some very little transaction out there. This is a very strange market. So anyway, that's my takeaway from this. If you have any comments, wherever you're watching, please comment below. What do you think about what's going on? What do you think about what I just said? Where are you located? Please comment below. What's going on in your market? Are you seeing multiple offers? Are you seeing many bidding wars still out there? Tell me what's going on. Where what part of the country are you watching from? Yeah, let me know your situation. I'm very curious to know. I live in San Francisco Bay Area for the past 30 somewhat years. Again, if you see any kind of value whatsoever from this video, please smash the like button and subscribe to my YouTube channel. I do a weekly housing market update on the general housing market trends. And also I talk about real estate investing for any people who are interested in buying rental properties. With that in mind, you can also subscribe to my website below, put your email on there so you can become a free member of our real estate investment club community, if you will. So you receive a weekly email on real estate investing into your email so you can learn more about how to become a real estate investor. So that's all I have to say. Thank you so much for attending, and I'll see you on the next video. This is Seewing Yee. Bye-bye.